What up, Hyperchange? Welcome to another episode. Today, we're going to go through Tesla's Q2 2020 deliveries and then go through the impact that could have on the company's profitability for the quarter. The stock is above 1,200 as I make this episode, up about 7 or 8% on the back of these numbers that were released this morning. So the market loving this news. It was a good amount above the Wall Street consensus. Not that matters too much. But yeah, anyway, so here are the numbers. Tesla reports 90,650 deliveries. Pretty pumped because I guess 90,000 in the video that I put out a couple days ago. So finally got lucky with that one. But 6,300 Model S and X, production, 10,600 deliveries, 14% of those subject to lease accounting. So Model S and X continuing to be, much lower sort of structurally now that the Model 3 and Y are on market. Really strong quarter for the Model 3 and Y, 75,946 produced. 80,050 delivered, only 4% subject to lease accounting. I love pointing out how the lease accounting thing is still so much below the industry norm of how many cars typically get leased. That's another sort of underlying indicator that demand is super strong and Tesla is able to sell their vehicles outright instead of financing them with leases, and that's just a stronger financial model for them. They don't need to rely on leases yet because demand is so strong. Overall production, 82,000 deliveries, 90,600. So last quarter in Q1, sort of this is how Tesla works. They build a little more cars earlier in the year and then sell through that inventory later in the year. So that's what we saw in Q2. So deliveries outpaced production by about 8,000 vehicles. So this is huge implications into the company's cash flow for Q2. And I want to just chart these for you really quickly. As you can see, this is what deliveries were heading into the quarter. This is what my estimates were. Here's what the numbers that were actually reported. And this is actually up a little bit sequentially, about 2% from last quarter, which is pretty mind-boggling when you think that Tesla's factory was shut down for just the last week of Q1, and now in Q2 was shut down for almost 6 weeks or so, over a month in April and early into May. Tesla's main Fremont facility was literally shut down, yet despite that, they were able to grow. It was only down about 5% year over year, and given that factory shutdown, I mean, this is pretty incredible how quickly that all bounced back for Tesla. And I think a huge piece of this was not only that Fremont bounced back extremely quickly, but that Gigafactory Shanghai, those sales in China, now that's up and running. My guess is that could have been 30 to 35,000 vehicles produced and potentially delivered just out of China alone, and that's all embedded in these numbers. That's important to keep in mind. They also include this little detail that while our main factory in Fremont was shut down for much of the quarter, we have successfully ramped production back to prior levels. This has really good implications into Q3. So let's get into the estimates, my estimates for that, which I'm estimating. Originally, I was estimating like 118,000 on my previous episode for Q3, but just seeing how strong this quarter was, thinking it through, knowing production's already back up and running, unless some sort of unexpected other shutdown occurs. My guess right now is that Tesla could potentially deliver about 140,000 cars in Q3. That's with Fremont getting back up and running. That assumes, China grows to maybe 50, 60, 70,000 deliveries. And if it does that, 140 could even be a low ball. If they deliver that 140K in Q3, they would still need about 181,000 vehicle deliveries in Q4 to hit their 500,000 annual guidance. Now, so I think that's well within reach. It looks like Tesla will still be able to hit its guidance. So, all in all, looking at this quarter, before we get into the profitability implications, Tesla, we have a massive pandemic. Their factory was shut down out of the blue for over a month, their main factory, and they're still potentially on track to hit their annual guidance of 500,000. That was before any of that happened. This is almost mind-boggling, and that would be massive unit growth from the 360,000 cars they delivered in 2019. Really pumped. Moving to the implications for profitability, Tesla's posted positive operating income in 3 quarters in a row. They posted positive operating income of $283 million last quarter alone. And like I said, Tesla's deliveries have actually grown 2% since then. And so my take is that Tesla might actually, maybe there's some one-time costs associated with restarting and shutting down the factory. But other than that, I think there's a great chance that Tesla shows profitability on a GAAP operating income basis. Tesla's GAAP net income in Q1 2020 was $68 million. They've also had that positive for 3 quarters in a row. So now a lot of people are wondering if that's positive again. The chances for them to get included in the S&P 500 relatively shortly goes up. And so that's kind of why everybody's watching index funds will be forced to buy it. This can be a huge structural tailwind for the stock. And the big sort of X factor here is regulatory credits, because those did spike for Tesla last quarter. My interpretation is that Fiat Chrysler credit deal kicked in. That's a multi-quarter deal sort of prearranged, although Fiat Chrysler is probably selling a lot less cars than they originally planned now. So I don't know, yet to be seen how much those credits are, because those are, $300 million a quarter last quarter. Those could swing by a couple $100 million, and that could be the difference between profitability for the quarter. But, that's more of an accounting game, not really related to the core business of Tesla. And that's my biggest takeaway from this quarter is that Tesla, despite the pandemic, despite everything, my original estimates for deliveries this quarter were like 60,000. That's what I was preparing for, 50,000. Like I was like, this is going to get really ugly. And yet when it's all said and done, Tesla executes 90,000, production back up to crazy levels. Just another unbelievable quarter from Tesla. And that's why the stock is rising accordingly. And I think it's, the fact that their annual guidance is still intact as well is going to be huge. And I think, profitability or not, this is going to be a very strong financial quarter given everything, and just gives you a huge clue to how profitable, how much cash flow, and how much growth there's going to be when all of this subsides in the second half of 2020. I think investors are turning their focus to that and rightfully getting super, super pumped. So anyway, this is Hyperchange. I'll be back soon with a video analyzing Tesla's financials from Q2, so definitely subscribe for that. And shout out to our Patreon supporters, producers. I'll see y'all next time.